Good morning, friends. I am Ashish Agrawal from Team NGOenabler, and with the new year already stepping in, we are back with a video on most recent amendment made by the Ministry of Home Affairs on the very last day of 2024. Yes, a gazetted notification was issued by Ministry of Home Affairs wherein an amendment has been made under Rule 5 by inserting a proviso, and even bigger amendment which the notification lays out has been made in the annual return FC4. So today in this video, we will not only handhold you on the changes made but also analyze the impact of the notification on both the NGOs as well as the professionals dealing with them. Let me also add here that along with the notification, another public notice was issued by the department on the same date clarifying regarding the refund of TDS from non-FCRA account to FCRA account. We will cover that too in details in our next video. So let's begin. On 31st December, this notification was issued, so it's clear that the applicability of it will be, of course, with effect from 1st January 2025. This implies the new annual return and the compliances related to the amendments are applicable for the year 2024-25. Moving on to the amendment, a new proviso to Rule 5 has been added which says, provided also that the association shall have the option to carry forward the unspent part of allowable administrative expenses in a financial year to the immediately succeeding financial year for reasons to be mentioned in Form FC4. This implies now the organizations can set aside or accumulate 20% of the total receipts specifically for administrative expenses and even carry it forward to be utilized in subsequent years in case such amount remains unspent. It's almost similar to what has been prescribed under the Income Tax Act for charitable organizations, where they are allowed to set aside or accumulate the unspent amounts, where such organizations falls short of 85% application. But yes, it's not completely similar because under FCRA, the purpose has been already defined to be administrative expenses by the department itself. Moreover, even a reason has to be given for carrying it forward to the subsequent years. This can be a welcome move for certain NGOs who find it difficult to curtail their administrative expenses due to the size, area of operations, and the nature of activities being carried out by them. But at the same time, there might arise various confusions and questions regarding such carry forward of funds for administrative purposes. What if the admin expenses as per the budget of various projects as approved by the respective donors is less than 20%? Will the organizations still be allowed to carry forward the unspent amount based on the calculations as per 20%? Will it not be a deviation from the intention of the donor who has funded the project? And if they are not allowed in such cases, how to fill the new table given in Form FC4, because most of the calculations might autoflow once the total foreign contribution actually received and the actual admin expenses incurred during the year is filled in serial number B and D of the table. Giving you an instance here which will provide clarity on what I am trying to explain here. Suppose the total foreign contribution received during the year is 1 crore. In serial number C, it seems automatically 20 lakhs might be filled. Moving forward, the actual admin expenses incurred shall be filled and the unspent balance shall automatically come out. But what if, as per the calculations of different project budgets, the admin expenses total to around 15% of the total foreign contribution or even lesser? Will the table so filled earlier will not give the incorrect picture? This confusion needs to be addressed soon through FAQs by the ministry. Yet another amendment made in FC4 is to report the amount of transfer of income tax refund. I repeat, another amendment which is made in FC4, the annual return, is to report the amount of transfer of income tax refund from non-FCRA account to the FCRA account which relates to it. A clarification too has been issued in this regard as an addendum to the notification, where it is clarified that such transfer shall not tantamount to the violation under FCRA. I repeat, such transfer from non-FCRA account to the FCRA account of the income tax refund shall not tantamount to the violation under FCRA. We will explain in detail the clarification so issued in our next video. Now comes another important change which is made in the annual return FC4, which seem to have increased the responsibility and compliance burden related to the FCRA norms on the auditors of such organizations. Now in the annual return, the details of the chartered accountant too have been sought, such as the name, address, membership number, email address, date of issue of certificate, along with a confirmation on whether any violation has been made under FCRA by the organization with complete details of the same. I repeat, in the annual return, the details of the chartered accountant too have been sought, such as the name, address, membership number, email address, date of issue of certificate, along with the confirmation on whether any violation has been made by the organization under FCRA with complete details of such violation. Though in our opinion, the auditors must already have been reporting any such violation thereof in their audited financial statements, but now even in the return, it is being directly getting certified by them. This is getting confirmed from the fact that even the amendment has been made in the prescribed format of the CA certificate under FCRA, where the following paragraph has been inserted. It says, I have examined all relevant books and records, including the items mentioned in column 8 of FC4, and to the best of my knowledge and belief, then the name of the association has to be given, and it has to be confirmed that it has not violated any provisions of the FCRA or violated the provisions of the FCRA, and then the details has to follow. This implies it's a word of caution for the auditors that now they need to be very thorough with the FCRA regulations and be critical and skeptical in their approach while conducting verifications and validating the figures reported in FC4 by the management, to ensure that any violation, big or small, doesn't go unnoticed by them, and any deviation is disclosed and reported both in the CA certificate as well as FC4 along with the audited financial statements. The auditors shall also now need to be prepared for any cross investigations that might be called for by the Ministry of Home Affairs if any violation is found out later by them in such organizations. I repeat, the auditors shall also now need to be prepared for any cross investigations that might be called for by the Ministry of Home Affairs if any violation is found out later by them in such organizations. So friends, be prepared for deeper scrutiny and investigation of your FCRA accounts by your auditors, and remember that both the department and auditor shall now have zero tolerance regarding any violation of FCRA regulations. I repeat, remember, both the department and your auditor shall now have zero tolerance regarding any violation of FCRA regulations. The management need to be more cautious and vigilant while utilizing the FCRA funds and maintaining the FCRA books of accounts, as any small error can lead to reporting of violation which could impact your registration. I hope we have been able to bring clarity on the latest FCRA amendment and the impact of the notification. For more such updates and tutorials, keep tuned to our channel. Don't forget to subscribe it and put your notifications on. You can also follow us on LinkedIn, Facebook and Twitter. Thank you.